will be recorded and shared with everyone via email and our other social media outlets, including YouTube. Over to you, Folami.
Thank you, Ife. So to everybody, once again, good afternoon. Happy Sunday, kings and queens. Thank you for joining us. So our financial literacy discussion topic for today is getting an 850 credit score. Credit is an important leverage that can be used to rapidly build generational wealth when used appropriately. Building and maintaining a great credit score is essential. Today, we have a presenter on the call to lead this conversation by the name of Ms. Isah Conteh. Isah's from the Bronx, so Boogie Down's in the house. And as a first generation Gambian American in an house of eight, she launched a fashion business where she was designing custom dresses. She quickly realized the importance of being financially literate and immerse herself in all things finance. Her passion to help other individuals born without a silver spoon is what launched helped her to launch Conteh Capital Co. So through this company, she's able to teach fundamental financial principles. Conteh Capital Company has been helping consumers achieve the highest financial potential for the past 4 years. So thank you again, Ms. Conteh. Please begin.
Good evening, kings and queens. I was talking for like 2 seconds and I was on mute. But good evening, everyone. As he said, my name is Isah Conteh. I'm a first generation Gambian American. And as he said, what inspired me to want to be able to educate people in financial literacy is just growing up in a home with 8 individuals and, just not having that literacy, struggling, watching my mom struggle, working 2 or 3 jobs. My dad was there, but he might as well not have been there because, he couldn't really support us the way that we needed to be supported. So I just didn't want to see like another person growing up that way, especially my own people, because I consider all Africans my people, whether you're from Nigeria, Ghana, it doesn't matter what part of Africa you're from, we're all brothers and sisters. So I wanted to especially give this education to this organization here because everybody here is African or of African descent. So that's just what inspired me to want to get into this field. And as he said, I'm from the Bronx. If you're from the Bronx as well, put Boogie Down Bronx in the chat just to represent. And I'm just going to go ahead and share my screen real quick. So just put in the chat if you guys can see my screen clearly. And then we're going to get started. So today what I'm going to be talking about is how you can set yourself up properly to get an 850 credit score. So, there's a lot of information out there. You could easily go out and Google it, but I just wanted to give you guys a guide that doesn't have too much fluff. There's too much fluff on the internet nowadays. So I tried my best to give you guys some things that you can actually put into place right now. That's not too much fluffy information. All right, so basically the name of my company is Conteh Capital Co. And we're gonna be talking about how you can get an 850 credit score. So we're gonna first start off with what is credit? Sorry, my presentation is acting up. So here's just the guide of what I'm gonna be talking about today. And the first topic is gonna be, what is credit? So basically, to put it simply, credit is the ability to borrow money and access goods and services with the understanding that you're gonna pay for it later. So what lenders or merchants or, like service providers, what they do, which you can also call them creditors, what they do is they grant credit based on their confidence that you can be trusted to pay back what you borrowed. So what helps them come to the conclusion of how trustworthy you are is your credit report and your credit score. So all of the things that's on your credit report, they'll put that information the credit bureaus put all of that information together to come up with one score to basically help these providers out, these lenders, come to the conclusion of whether you can pay back your bills on time or not. So basically how trustworthy you are to be able to pay back what you borrowed. So basically, if you don't have enough money, you shouldn't be borrowing. If you don't have enough money to pay back what you're borrowing, you should not be borrowing. But we're gonna talk about why credit matters. So here's a statistic that I found very interesting. 60 to 70% of entrepreneurs shut their businesses down within the first 2 years, and the majority of the reason is due to financing. Sorry. Sorry, something just popped up on my screen. Okay, so 60 to 70% of entrepreneurs shut their businesses down within the first 2 years. Majority of the reason is due to not having finances. And so basically credit could be a way that you can, get your business off to a great start and just propel yourself, because a lot of us, we are behind when it comes to finances. People, and when I say us, I say people who look like me. So of my skin color, my hue, we are behind when it comes to finances because we can't get the funding to be able to start our businesses off and propel us to be able to pass down generational wealth. So one way that you could do that is through credit. So good credit is necessary if you plan to borrow for major purchases, whether it's for a business, to start a business, or whether it's for home ownership. A lot of us, we're behind. We don't have homes, or we're not qualifying because we don't have the funds. But if you have a great credit score and you are leveraging credit the proper way, you can go ahead and start businesses, which you can now use the funding that you get from your businesses and get a home and just put your future generation off to a better start. We don't have to start at the back of the line anymore if you're leveraging credit the right way. So this is one reason why credit is important. Credit also is important if you're like basically want to get a better interest rate. So if you have a great credit score, it will help you qualify for better interest rates. And then also many card issuers, they reserve the most enticing reward cards for customers who have great credit. So establishing and building up good credit over time is an important element for sound financial health. Landlords, they may check your credit when deciding if they'll rent you an apartment or determining how large a security deposit to require. So you can even get away with not having to put down a deposit if you have great credit. So it's not just the lenders that, just the lenders that are looking for your credit. Landlords check it, and even employers, sometimes they look at how good your credit score is when determining if they're going to make a hiring decision or even if they want to give you a promotion. So it's not just taking out a loan or, for credit cards. Credit is very important throughout your whole financial picture. So now we're going to talk about what your credit score is made up of. So the bulk of your credit score is made up of payment history. So if you know that 35% of your credit score is made up of payment history, you want to make sure that you're always paying off your credit cards on time. And then another 30% is based off of the amount that you use on your credit cards. So you want to always make sure that you make small purchases and never max out your line of credit. Then another 15% is credit history. So you want to make sure that you keep your oldest accounts open. So I know when we're younger, we're in college and we open up those Victoria's Secrets credit cards. And then we think like when we're older, we graduated from college. Oh, I don't know why I opened up this credit card. I want to close it out. It may not be a good idea for you to close it out because your credit history makes up a 15% of your credit score. So you might want to keep that open because it gives you that history. And then another 10% is the amount of new credit that you apply for. So the reason why this is important is because if you're applying for too much credit, it makes it look like you're desperate for credit, and it makes it look like you're living off of credit, which you never want to look like you're living off of credit. You want to make sure that you're leveraging credit, not living off of it. And then lastly, 10% is the types of credit that you have. So if you have just like student loans on there, or if you have just credit cards, you want to make sure that you mix it up. You want to have different types of credit on there. So you want to have revolving credit, and then you want to have like different types of credit on there as well. So whether that's home equity, business credit, personal credit, you want to make sure you mix it up because they look at those things. So this is another interesting statistic that I came across. US consumers owe almost 900 billion in credit card debt. That's crazy, right? We just saw that, what's his name? Kanye West just became a billionaire. He's worth, I think it's 6 billion. That wouldn't even cover the amount of credit card debt that we owe. So when you think about what your credit report should look like, most people don't know what your credit report should look like, what a good credit report should look like. So I just put this together so you guys have an idea. So basically you want to have at least minimum 10 positive accounts on your credit report. So I know a lot of people, like when they graduate out of college and they have those student loans on there and they're like, I have my student loans and it's reporting on my credit report. How can I get this taken off of here? It may not be a good idea for you to get it taken off of there, because when you have your student loans reporting on your report, it's usually not just one student loan. It's like 5 to 6 different student loans that's reporting on your credit report. And if you just keep those accounts in good order, that could actually help you out, because you need at least minimum 10 positive accounts reporting on your credit report. And then you want to make sure that you stay within 10% utilization. So don't use more than 10% of your credit limit. That just goes back to what I said. If you don't have the money to pay back what you're borrowing, then do not borrow. So only spend what you can pay back. And then you want to make sure that you have 100% payment history. So that goes back to what I just said. Make sure you're paying back everything that you're spending. Then 0 derogatory marks, at least 4 to 5 years of positive history. So that goes back to the Victoria's Secrets card. Don't close that out. That might actually help you. And then 2 to 3 inquiries max. So don't go past that, because then it looks like you're desperate for credit. It looks like you're living off of credit versus leveraging it, which is what you should be doing. So now that we talked about that, I want to talk about how you can prep your credit report for disputes. So before you even go to start disputing, taking these negative items off of your credit report, this is something that you should keep in mind. So when you're disputing items off of your credit report, they should either be 1, unverifiable, or 2, inaccurate. So those are the 2 things that they look for to take those items off of your report. And I just provided a few resources that you guys can take note of. So if you're looking to become unverifiable, what you can do is you can opt out of these companies here: LexisNexis, SageStream, CoreLogic, Innovis. You can go ahead and you can actually go on their website, or you can call them up. And what you're gonna do is you're gonna opt out of these companies, because these are the companies behind the scenes that are the ones that's actually verifying your info. So it's not actually the credit bureaus, it's these third-party companies that are verifying the information. So that's why you find sometimes it's difficult for you to get those items taken off of there. But if you become unverifiable now, if you go and you opt out of these websites, now they cannot verify that information. So it makes it easier for you to get those items taken off of there. And then 2, inaccurate. So you want to look through your credit report, see if there's any inaccurate information on it. So whether that's misspelled names, multiple last names, clean up old addresses that's on there, especially if those addresses are the addresses that you apply for most of those trade lines on. So if there's one address on there that you apply for most of those items that you're looking to take off, you want to make sure you take that address off there. Even if you have to use a cousin's address or whatever the case may be, just make sure you clean off all those old addresses. And then you want to make sure you have only one job reporting on there, because it makes it look like you're as stable as possible. So only have one job reporting on there. So just keep that in mind: unverifiable and inaccurate. The average credit card balance is more likely in the range of 6,000 to 8,000. which is crazy. So this is for the average person. Their balance is within 6,000 to 8,000. Most people do not even have $500 saved in their savings account. So imagine having a balance that is 6,000, 8,000, and you don't even have $500 saved in your bank account. How are you going to get rid of this debt? I don't know. But so now we're going to talk about how does one build their credit report. So basically, what you can do to build up your credit report, you can set up a secured loan with your bank account. So you can, anybody that has a bank that they're currently associated with, what you can do is, the easiest thing is just call them up and see how you can set up a secured loan. So what you're gonna do is you're gonna set up a secured loan with 3 different banks, right? So when you set up a secured loan, basically is like you're loaning yourself money minus a small fee. The fee sometimes is about 1%. So you're gonna rinse and repeat that process with 3 different banks. And basically what that's gonna do is gonna help you create some of those trade lines that I was talking about. So you wanna make sure you have at least 10 positive accounts on there. So if you rinse and repeat that process with 3 different banks, now you have 3 accounts that's positive on your credit report. And then another thing that you can look to do is you can look for alternative credit reporting agencies. So like Credit My Rent is one of them. And what they do for you is they'll backdate up to 2 years worth of credit history. So remember we were talking about credit history is one of the things that they look for on your credit report. So if you now go with Credit My Rent, and what they'll do is they'll backdate up to 2 years worth of credit history. So for somebody who's just getting started building up their credit and they don't have any credit history, this is something that can help you with establishing credit history because they'll backdate it up to 2 years. And now every time you pay your rent, that'll go to your, that'll report on your credit report as a positive payment. So this is something that could definitely help you. And then self-lender is another type of secured loan. So basically you're loaning yourself money. At the end of the year, you'll get that money back minus like a small fee of 1%. And basically every month you'll put $25, $30, however much you choose to the side for yourself. At the end of the year, you'll get it back and it'll report as a positive payment or on-time payment. So these are a few steps that you can take to just help you build your credit report. You can get a secure credit card. If you're just getting started, you can get a secure credit card, which I would definitely recommend for a newcomer because you're just putting your own money in collateral. So you won't take out anything more than what you have. And then also you can look to become an authorized user. So an authorized user, it was originally for parents to help their kids establish credit. So for anybody on here who's a parent, that's something that you could definitely look for if you have young kids. By the time they're 18, you could have helped them establish, 2 years worth of credit history. And then now when they're 18, they don't have to go, struggling looking for loans or things of that nature. They're already qualifiable. So that's something that you could definitely look for. So now here's another statistic that I wanted to share. The average annual percentage rate for outstanding card accounts in May 2020 was 14.52%. So just keep these things in mind. These are just things that I looked up and they were interesting. So I wanted to share it with you guys. 14.52%. So what you guys want to understand is, I'm not sure if you guys are familiar with the compounding interest. But basically compound interest can work for you or it can work against you. 14.52%. So if you put that if you put 14.2% into 72, that'll give you about 5%. So basically what that's saying is every 5%, every 5 years, your debt is doubling. So you want to make sure that you take that into consideration because compound interest, it can work for you or it can work against you. So the banks understand this. So you guys need to understand this thing as well. But Okay, so basically what I wanted to do is I just wanted to see who has been paying attention throughout the presentation. So I did put a few things, a few questions together based on what I shared with you guys. And what I want you guys to do is just put the answers in the chat. And whoever gets all of the questions correct, you will get a prize from me. So answer truthfully, guys, do not lie. All right, so what percent of entrepreneurs shut their business down within the first 2 years? I'll give you guys a few minutes. Okay. Next question. The average credit card balance is likely in the range of blank. 6,000 to 8,000. No one said anything about a quiz. 4,000 to 6,000. And then the next question. All right, US consumers owe almost blank in credit card debt. 800 million, 900 billion. I don't know, I wasn't paying attention. You guys are smart. I see y'all been paying attention. Okay, next. All right, the average annual percentage rate for outstanding cards accounts in May 2020 was what? 15.5%. I finished school a long time ago, it don't bother me, or 14.52%. Okay, and that's the end of it. So what we're gonna do is we're gonna look through the chat just to see who got all of the questions right. And the lucky person is going to get a prize. If there's a couple of you guys, don't worry, I have enough to go around. But that's basically the ending of my chat. Here is how you can get in contact with me. So I have my contact, my phone number, my email, if you guys are old school, and then also my social media handles. So that's basically all. I believe we're gonna open up for questions.
Awesome. Thank you so much, Isah. Good conversation. So this is the Q&A part of today's session. If you have any questions, you can raise your hands through the chat section, and I would call on you to ask a question, or you can just post a question into the chat section, and I will just read off your question. So Isah, while people are getting their questions ready, I'm going to ask you a question. Right? So you mentioned leveraging credit and not living off your credit. Can you just expand more on that?
Yeah, so too many people nowadays, they're using their credit to swipe for everything. But basically what credit is, what I think is used the proper way is you're supposed to leverage it, whether it's for business. So like I was saying, 60 to 70% of people who start their businesses, they shut it down within the first 2 years due to lack of funding. So what you could do now is if you establish enough business credit or personal credit, you can use that credit to help propel your business within those first 2 years. And then obviously now you're gonna use it strategically so that you get a return and then you pay back that credit. So basically that can help you propel your business so that now you don't even have to rely on the credit. But too many people are just swiping their credit to live off of for like everyday expenses, for food or whatever the case may be.
Okay, awesome, thanks. Also, we're getting the bad report as well, right? So can you just expand on that? If you get a bad report from a company from like years ago, right? And just walking through those process, can you just expand on how do you get those bad reports of your credit that might be impacting you today?
Are you talking about the backdating of the credit history for the?
No, like if you have those bad reports, so if someone has like a a low credit score, right? And that's because they have all this bad report from like 5 years ago. So what's the process to get those bad reports off their credit so they can start getting the credit score much higher?
Oh, so okay, to get those negative items taken off of there. So I would start with just prepping your credit report. So remove any inaccuracies on there, because remember the two things is you have to either find inaccurate information when it comes to those negative items you're trying to take off, or it has to be unverifiable. So that's why I showed how you can prep your credit report before you even start the dispute process. So you want to make sure you get those inaccurate items taken off of there, whether it's inaccurate spelling of your name, inaccurate addresses, take all of those things off of there. And then now you can opt out of those companies that are going to verify that information. So when you opt out of that, that gives you a higher chance of you getting those items taken off when you go for dispute. So now you can either go through the whole Googling process and try to learn how to dispute the items on your own. Or if you know somebody who is in the credit repair space, they can start that dispute process for you. But basically prepping your credit report before is going to give you a higher rate of getting those items taken off of there. Because if they cannot verify it, if it's inaccurate, they have to take it off.
Okay. Cool, thanks. I'm not sure if you shared this, could you share some platforms to check your credit report? I know people would say like myfico.com or so. Do you have any other website people can check their credit report?
Yes, I always like to recommend annualcreditreport.com, because you can get your credit report for free once a year. So now what you can do is you can just pull from one credit bureau at a time. So like every 3 months, you can go ahead and pull from one credit bureau. You don't have to pull from all three, and it'll be free for you if you want to check your credit report. So annualcreditreport.com, I like that specific organization because it's accurate. You can also use Credit Karma, but sometimes Credit Karma is lagging in information. So that's why I always recommend annualcreditreport.com. And like you said, MyFICO. But yeah.
Okay, thank you. I have a question from Narik. Narik said, how do I remove hard inquiries from my credit report?
So basically you have to go through the dispute process. So that's the only way. So you can go through the dispute process, but if you follow the steps that I gave in here to prep your credit report, you opt out of those agencies, it'll give you a better chance of getting those items taken off of there, because you can go through the dispute process and they'll say, oh, this item was verified, so they're not going to take it off. But if you opt out of those verifying agencies, now they can't verify the information, so they have to take it off. So we have many different strategies as well. I don't know if you're looking to do it on your own or if you want somebody to help you out, but you can go through that process of prepping your credit report basically, or you can look for somebody to help you in that area.
Okay, thank you. We have a question from Gail. She says, will Credit My Rent start taking note of my rental payments once you sign up, or will it also account for the ones you've paid in the past as well?
Yeah, so it'll backdate it 2 years. So 2 years worth of payment history. So as long as you've been paying on time for 2 years, it'll backdate all of that information and it'll put it on your report as a positive on-time payment. So that's the great thing about it, is it'll give you that credit age, that history that's important. So it'll go back 2 years and then from when you started as well. So it'll continue to report it as you go on.
Okay, awesome. Ms. Seke has her hands raised. Do you want to go ahead and unmute yourself and ask a question, Seke?
Yes, hi. Thanks for the presentation. What's the difference between a FICO score? You have a score for your FICO, and then you also have a different score for the 3 different reporting agencies. Which of them carries more weight? How do lenders use those numbers? Thanks.
Okay, good question. So basically they're all just reporting agencies. Basically FICO, 90% of lenders use FICO. So as you were saying, which one carries the most weight? If you just focus on your FICO, 9 times out of 10, you'll be good, because 90% of lenders, they focus on your FICO. And I like that you asked that question, actually. When you're going to a lender, like for example, let's say you're trying to get financing for a car, or you're trying to open up a credit card with a specific bank, what you could do is you can ask them, which credit bureaus do you actually pull your information from? So they'll tell you, oh, I pull it from Experian, or I pull it from wherever they pull it from. And then now what you can do is you can go look at that specific bureau and make sure all of your information is clean from that bureau. Because not all lenders, they don't all pull from all of the credit bureaus. So what you could do is find out which one specifically and then go clean up that report.
Okay, makes sense. Thank you.
No problem.
Awesome. Good question. The next one comes from Mr. Adebayo. Is asking, would you consider utilizing credit card for everyday expenses, but making sure it's paid in full, living off monthly basis? Is that leveraging, or is that living off your credit?
I'm sorry, say that one more time.
So his question is, would you consider using your credit card for everyday expenses, but making sure it's paid in full each month? Would that be living off your credit or leveraging credit?
Yes, that's actually leveraging credit the right way. As long as you're going to make sure you pay it back in time, then you should be good. Most people, they're living off of it, and that's because they don't have the money to, pay for their everyday expenses. But if you have the money to pay that back, then that's actually smart. You're leveraging it the right way.
Okay. I have Mr. Oludave has his hand raised as well. Can you go ahead and unmute yourself and ask your question?
Yeah, good evening, everybody. Good evening, Ms. Isha. My question, I have two questions, I'm sorry. The first one is when you talk about the three, you can get a loan from 3 banks or something like that. I don't really understand what you mean by that, you can get 3 loans from 3 different banks, and I don't get it.
Oh, are you talking about when I said you can get a secure loan?
Yeah, secure loan.
Okay, so basically what you want to do, this is a way that you can actually build your credit score out. Because remember when I was saying you want to have at least 10 good reporting accounts on there. So one way you can establish 3 is by getting 3 different secure loans from 3 different banks. So what you can do is basically a secure loan is you go to your bank and you set up a secure loan. And what that's going to do is you're going to put money away for yourself on a monthly basis with that bank, and they'll give you your money at the end of that term minus a 1% fee. So when they give you that money back, what you could do is you rinse and repeat that process with another bank. So you go and you take the money that they gave you back, which was your money originally, minus the 1%, and then you go and you open up another secure loan with another bank. And then you do that 3 times. That'll set up 3 different accounts for you. 3 different positive accounts for you. So it's just a way for you to build up your credit report.
Okay. Okay, thank you.
No problem.
Hi, we have another question from Amarachi. She's asking, in terms of the 10 accounts to have for a high score, is there a stronger account to have, example, mortgage or versus credit card?
You said mortgage versus credit card?
Yeah, that's a question. She's asking, in terms of the 10 accounts to have a high score, by which one has a stronger leverage, your mortgage or your credit cards?
Which, to be honest, whichever one is reporting positive is the stronger account. So it doesn't matter which one specifically it is, as long as it's a positive account. Because people have more than 10 accounts on their report, but if it's not positive, then it really doesn't matter what it is. So as long as you make sure it's in good order, you're making your payments on time, it doesn't matter if it's a mortgage or a credit card. Basically, just make sure you keep the account positive, you're paying those payments on time.
Okay, awesome, thank you. I was going to ask a question. So, like, most folks want to buy a house, right? That's one of what we call the American dream, and people get disqualified based on credit score. Can you expand on what's a good credit score before you go apply for a mortgage loan, right? And what can you do to better your scores in that regard as well?
Good question. Good question. I like you asked that question because it's really not about the score. I mean, the score is important, but the most important thing is actually what's reporting on your credit report. So that goes back to what I said. You got to make sure those accounts that's on there are positive, because you could have a 700 score and still get denied through the home buyers process. You can still get denied if you have negative items that are reporting on your report. So what you could do is before you even start the process, you want to go and you want to get pre-approved, but then you want to make sure that you clean up your report. So the score is not as important as what's actually reporting on there. I hope that's answering the question, but you just want to make sure that your accounts that are reporting on there are positive. And then, obviously you want to have a 680 and above, I would say, just to give you like a number to go off of, but it's more so what's on your report that's important.
Okay. Thank you. One other question, right? So people have often said you can add someone as an authorized account user on your account to build your credit.
Mhm.
Can you talk to that as well?
Yes, so you can add someone as an authorized user on your account, but you want to make sure that you limit what they can do on your account. So you want to do that for people that you actually know, though. Or should I say the person that wants to get the authorized user, they should make sure that and trust that person, because whatever they do with their credit, whatever reports on their credit is going to show on your credit. So it wouldn't really make sense to do it with somebody that you don't know. You want to make sure that that person is paying their payments on time, they're keeping their credit report in good order, or else it's going to be like counterproductive for you to do that. But just make sure that you trust the person and make sure that everything is in good order. They're making their payments on time. If you have to call the person every 6 months, hey, you're making your payments on time. I know that seems like it's a lot of work, but if you're gonna go that route, then just make sure.
Okay. We have more questions in the chat box as well. So if is asking how much weight in terms of percentage does the secure credit card pose on the credit score?
How much weight does the secure credit card? Well, just to answer, I don't really like the secured credit card too much. I only recommend that is if you're brand new to the whole credit building process, because like a secured credit card, the limits are very low, right? So if you're brand new, you don't have anything reporting on your credit report, then I would recommend a secured credit card. But the percentage is not much, which is why I say that I don't really recommend that unless you're brand new to the process. But I don't know the specific percentage, but the limits are very low. They're like 200, 300, 500. So it's not really doing too much for you unless you're like brand new in the space of building your credit.
Okay. A question from Mr. Adebayo again says, what's your perspective on loan consolidation? Would you recommend such?
Loan consolidation?
Yes.
Well, the thing about loan consolidation, it depends. A lot of these questions, the answer is going to be, it depends on person's situation. But basically loan consolidation, it depends on your situation, but just know that when you consolidate those loans, what you're doing is you're bringing your credit limit down in a way. So it can hurt you or it can benefit you. It depends, because some people may need to consolidate their loans in order for them to be able to pay it back. However, if you're you're trying to establish, if you're trying to establish credit so that you can go ahead and inquire about increasing your credit limits, it may not be the best thing for you to do, because what you're doing is that you're lessening your credit limit, if that makes sense. The amount that's available by consolidating those loans. So it does depend on the person's situation and what they're trying to do, but Yeah, everybody's situation is case by case. So that's why I always recommend you gotta like look at what your report actually has. Sit down with somebody that can consult with you and see what's the best solution for you. All of the solutions that I recommended, it may not be necessary for everyone. So everybody's situation is case by case, I would say.
Okay, that makes sense. Thanks. One question again from Gail. She says, in the process of making yourself unverifiable, do you just call those companies?
Yeah, so
just them to go ahead.
Yeah, you could call them or you could go to the website and opt out of the websites, but you can definitely call them as well.
Okay. Hey guys, if you have any more questions, you can raise your hands or you can post your questions in the chat box as well. I'm going to ask one while I'm waiting for any more questions from the guest members. So if you're trying to buy a house as well, right? I know you mentioned about the minimizing the ad inquiries or just people putting your credit report. Is there a limit on how many you can get done before you buy the house? I know that could impact you, right? If you have a bunch of folks putting your credit at the same time.
Okay, so you mean like the inquiries, how to limit them?
Yes.
Okay, so
or is there like a max of what you shoot for, right? Is there like a max to kind of minimize the impact on your credit score?
Yeah, so I would say stick between 2 to 3 inquiries max in order for your credit score to be the ideal credit report. But basically how you can limit it is what you can do is you can research those lenders specifically. So like, for example, if you're trying to apply for a couple different cards, what I know is Bank of America, they have 2 specific cards that if you apply for both of them at the same time, it'll only equal 1 inquiry. So you could do little things like that, where you research the specific lender that you're applying for, know which credit bureau they're gonna pull from, because not all of them pull from all of them. So like, for example, let's say Bank of America is gonna pull from Experian, Chase pulls from TransUnion, and then another card pulls from another one. So basically what you could do is you can apply for those 3 different credit cards and it'll pull from 1 credit bureau each. So now you have 3 different credit cards that you just applied for, but it only counts as 1 inquiry because not all of them pull from all of them. So you could do something like that basically to limit the amount of inquiries that's gonna show up on your credit report. It just takes a little bit of research, basically.
Okay. Just have one question pop up from Amarachi. She's asking, are there any negative consequences of having multiple mortgages on investment properties? Or is it better to shelter them as a corporation when it comes to your credit? So she's asking, would there be any negative consequence, right, if you have multiple mortgages from investment properties? Or should you just have them on a corporation? That way you don't have any impact on your credit score.
I mean, no, there wouldn't be any negative consequences on having 2 mortgages on your credit report. Basically, it just goes back to making sure that it's in a positive state, basically. So it doesn't matter how much you have on there, as long as everything is in a positive state, then you're good. But it goes back to what you're trying to do. If you want to, maybe, like you said, shelter your personal credit, then you can definitely do it on your business credit as well. But it doesn't have a negative consequence of having 2 mortgages.
Okay, I've got another question.
Yeah, well, what I want to add was to that question from Amarachi, you might also just consider a corporation or an LLC just to minimize any liabilities from any ventures, right? So not just from a credit standpoint, look at from an holistic standpoint in terms of liabilities, right? When you have investment properties, so just keep that in mind. Go ahead with your question. I'm sure we'll just take it. Or?
Yes. So with those companies whereby you can opt out, for instance, if you were to call them or if you were to do it from their website to opt out, do you get any type of confirmation email, something in the mail saying you've opted out of those companies?
Yes, you definitely, yep. So you can call them, and then you opt out, you get the email confirmation. If you do it all over the phone, they'll tell you right then and there, but then also you get the
Okay.
confirmation through email.
Okay, sounds good.
Awesome. Great conversation. Any last questions before we round up today's session? All right, I'm going to call on Doyin to close out the session. But before I do that, I'm going to put out a poll. If you can just take some few seconds to kind of rate today's session. And I'll call on Doyin to close out this. Doyin, are you ready to close it out?
Yes, thanks, Funshaw. Thanks everyone again. My name is Doyin, part of the African Business Club board. Thanks for joining us today. We really appreciate it. I know, here in the East Coast, the weather has been warming up. So to have people here sitting down on Zoom call on a Sunday, so we really appreciate that. And Isah, thanks so much for the knowledge today. It was a great session. Before we leave, we would like to ask you for our last session, which is the common sense finance. So like we always say, they say common sense not so common. So if you have a common sense finance tip for us today, please go ahead, Isah.
Yes, I do. So my common sense financial tip for today is gonna be, do not live off of credit, leverage credit to build generational wealth.
All right, thank you. I like that. It's so easy to live off of credit in America. Like you said earlier, most of us just swipe because it's an easy thing to do. So thanks for that. So guys, remember, leverage credit, do not live off of it. So with that said, I just said thanks again for joining us, everyone. This conversation doesn't have to end here. On Tuesday, we have the Talk to Us Tuesday, which will be at 7 p.m. We'll continue this conversation. I didn't confirm what Isah yet, but most likely she'll be able to join us if she is free on Tuesday. If not, we'll still have a good conversation with just all the other club members. And also, we are on Discord app. If you haven't joined on our Discord, I'm sorry to say you're missing out, because on the Discord app, we have a lot of people sharing ideas and information every day and connecting with one another on the Discord apps was very great. This session is recorded, and sometimes during the week we will share the link to the YouTube page to watch the recording, because I usually myself go back and listen to the sessions, and it's always a lot of gems and knowledge that we probably miss out from the speakers. So I encourage everyone to subscribe to our YouTube page and watch the past sessions that we've had, and this one also will be posted during the week. Also, we have our book club. Right now, we're still reading Rich Dad Poor Dad. We will announce the date for the discussion soon. So just look out for that, because we are almost at the end of the book. It's a great book. I've learned a lot so far from the book, one of my favorite. So if you haven't started, you can also pick it up and start. It's not too late, because it's a great book for us to discuss, and we'll definitely let everybody know once we have the date ready. With that said, I just want to say thanks again. Once again, this is African Business Club. Our goal is to normalize financial literacy and promote collaboration among Africans. So thanks again. And let's also always remember we are all kings and queens. So let's treat one another as such and support one another. Thanks, everyone. Peace and love.
Thank you. Happy Sunday.
Thanks.
Thanks, everyone.
Thanks.
Thanks,
Thanks.
Have
Isah.
a good week. Great week ahead.
You too. You're
Yeah.
welcome. Bye.